Simplifying strategy implementation for advanced investors. Navigating the investment world is a journey of constant adaptation and improvement. For advanced investors, crafting a sound strategy may come naturally, but the real challenge often lies in bringing that strategy to life. In this video, we'll walk you through actionable approaches to simplifying strategy implementation, helping you achieve greater efficiency and precision in executing your financial strategies. Let's break the process down, ensuring you have the tools, mindset, and techniques to bridge the gap between strategic design and execution effectively. Even the most brilliant strategies falter when they remain confined to theoretical frameworks. A common issue for advanced investors is the lack of clear connection between strategy creation and its application. Overcomplicated models, unrealistic expectations, and misaligned execution plans often lead to inefficiency and failure. The truth is, a robust strategy doesn't need to be convoluted. Simplicity is key. Simplifying doesn't mean reducing sophistication, but rather eliminating unnecessary complexity to make execution practical and actionable. Before we discuss implementation, let's revisit the core attributes of a strong strategy. Clarity of purpose. Define what you aim to achieve. Whether it's wealth accumulation, risk management, or diversification, each strategy should have a precise and easily communicable goal. Alignment with financial objectives. Ensure that the strategy reflects your broader financial goals and investment philosophy. Flexibility. Markets evolve, and your strategy should allow for recalibration when necessary without compromising its core objectives. By focusing on these elements, you're establishing a foundation that facilitates easier and more effective implementation. The next step is transforming your strategy into actionable steps. Successful implementation starts by decomposing your broader vision into smaller, manageable blocks. For example, if your strategy involves sector rotation based on macroeconomic trends, identify the sectors to monitor. Set specific criteria for rotating capital across sectors. Establish timelines or triggers for reassessment. By breaking strategies into such well-defined phases, you'll find it easier to track progress and make adjustments as needed. A strategy without measurable goals is like a ship without a compass. Start by defining clearly measurable key performance indicators, KPIs, to evaluate the success of your strategy. Ask yourself, what does success look like for this strategy? Is my goal tied to specific returns, risk-adjusted performance, or achieving a benchmark? Assigning metrics also allows you to stay objective, removing emotional biases that might otherwise interfere with rational decision-making. Having a structured framework for decision-making ensures that implementing your strategy is both methodical and disciplined. This framework should cover prioritization. Identify which aspects of the strategy deserve immediate focus versus long-term attention. Evaluation. Establish checkpoints for revisiting assumptions and refining positions. Contingency plans. Strategize responses for adverse market movements. When armed with this decision-making process, you can execute your strategy more confidently and efficiently. The role of technology in investment management has grown beyond optional convenience. It is now indispensable. Advanced investors should consider tools like portfolio management systems, platforms for monitoring portfolio composition, performance, and rebalancing needs. Automation tools, automated trading systems that execute strategic rules, conserving time and reducing manual errors. For example, software solutions can rebalance portfolios or manage tax efficiency without requiring constant oversight. These tools simplify execution without sacrificing precision. When integrating technology into your investment process, focus on these factors. Ease of use. The tool should enhance your workflow, not complicate it. Functionality. Ensure that the platform provides the features you need, such as analytics or multi-asset tracking. Scalability and costs. Choose a solution that adapts to your portfolio's size and fits your budget. Remember, the best tools are not necessarily the most expensive, but those that address your unique needs. An often overlooked factor in successful execution is discipline. It's tempting to abandon your strategy during market volatility or when hot opportunities emerge. However, sticking to your plan ensures that your decisions remain consistent with your long-term goals. Stay vigilant against external noise, whether it's sensational headlines or fleeting market trends. Discipline will reinforce the integrity of your strategy execution. While discipline is vital, so is adaptability. Markets are dynamic, and factors like economic downturns, inflation, or geopolitical events can render specific strategy assumptions obsolete. A flexible strategy involves periodic reviews and recalibrations. For example, suppose your initial strategy relied on specific monetary policy conditions. In this case, be open to revisiting fundamentals when those conditions shift. Flexibility does not mean deviation. It means maintaining a readiness to adapt when necessary. To evaluate your strategy's effectiveness, schedule regular reviews. These reviews should assess whether your goals and KPIs are being met, external market conditions impacting your strategy, performance of tools and frameworks supporting execution. Periodic reflections ensure that your strategy remains robust and aligned with your evolving understanding of the markets. Understanding where investors go wrong can help you sidestep common mistakes. Overcomplicating execution. Don't drown in hundreds of parameters or indicators. Ignoring risk management. Failure to factor risk can lead to heavy losses, even with a sound strategy. Over-reliance on technology. Use tools to assist, but remember they cannot replace human judgment and intuition. Being mindful of these pitfalls sharpens your ability to implement effectively. Risk management is an inseparable companion to successful execution. Strategies should include diversification. Avoid concentration in a single sector or asset class. Stop-loss measures. Define thresholds to limit potential downside. Stress tests. Simulate how your portfolio performs under adverse scenarios. These safeguard mechanisms protect your strategy, ensuring longevity and stability. Even among advanced investors, emotional biases can cloud judgment. Overconfidence, fear of missing out, FOMO, or loss aversion can derail execution. Practice emotional discipline by staying committed to predefined rules, avoiding reactions to short-term volatility. A balanced mindset ensures calculated, rational decisions at every step. Take inspiration from real-world examples of simplified, effective strategy implementation. For instance, an investor could use momentum-based ETFs to follow trends across sectors. Using straightforward automation, they rebalance semi-annually without overcomplicating decision-making. Such examples reinforce that simplicity and deliberate execution often yield better results than over-engineering. As markets evolve, so should your execution methods. Stay ahead by exploring innovations in investment management tools, updating yourself on emerging market trends and industries. Adapting to these changes ensures that you remain competitive in an ever-shifting landscape. For wealth managers, clear communication with clients is vital to ensuring alignment between their strategies and clients' financial goals. If you're managing your own investments, communicate regularly with any stakeholders to maintain transparency about the strategy's purpose and progress. Technology is a powerful ally, but human intuition and expertise remain irreplaceable. The ideal approach combines the efficiency of automation with the critical thinking that only experienced investors provide. For instance, use automated systems for operational tasks, like order execution or portfolio rebalancing. Simultaneously, reserve high-level decision-making, such as interpreting geopolitical trends, for human analysis. Time is a critical factor in strategy implementation. Lengthy delays between decision-making and execution can erode potential gains. Adopt workflows and tools that minimize delays, ensuring swift, accurate implementation. The right mindset is your greatest asset when simplifying strategy implementation. Confidence, clarity, and consistency are hallmarks of investors who successfully bridge the gap between vision and execution. Stay focused on the big picture while perfecting the smaller details. Consider incorporating these practical tools into your execution framework. Google Sheets or Excel for custom tracking. Investment platforms for aggregated portfolio insights. Market analytics software for informed decision-making. These tools save time and enhance your day-to-day efficiency, empowering you to focus on strategy refinement. With the proliferation of new asset classes, technologies, and frameworks, staying proactive is essential. Keep exploring avenues like artificial intelligence in portfolio management or sustainable investment opportunities. Being an early adopter often translates to a long-term edge. Ask yourself questions like, can I clearly articulate my strategy's goals? Have I identified the right tools to aid execution? Am I committed to evaluating and recalibrating my strategy? These self-checks ensure that you're consistently improving your approach. Simplifying strategy implementation is not just about doing more, it's about doing better. By breaking strategies into manageable steps, staying disciplined yet adaptable, and leveraging the right tools, you can execute effectively and confidently. Take a moment today to review one of your strategies. Identify opportunities to simplify, streamline, and improve its execution. Success in investing is not just about having great ideas. It's about turning those ideas into real-world results, one thoughtful step at a time. If you found today's video helpful, please like, subscribe, and share it with someone who could benefit from these tips.